$258 billion. That's the current market cap of one Tesla. The shares are a little changed today, but obviously we've seen a big surge in them as of late. Yesterday, we had Adam Jonas and Morgan Stanley upgrading his price target of the stock, but it's $740. The shares right now are at $13.90. He does have a bull case scenario that's higher than that, but that's his price target right now. We are joined now by someone who has been a pretty consistent pessimist when it comes to Tesla. I think it's fair to say that is Gordon Johnson. He is joining us now from New York. He's GLJ Research founder and CEO. We also got some news today about Chinese sales, which were up 35% in June month over month, according to the China Passenger Car Association. Gordon, you just have to unmute yourself if you don't mind, and we can discuss. You really need to get sort of a bear on the wall behind you instead of the stag to be on brand when we're talking Tesla. It is interesting to me, the enthusiasm at the same time that you got a big Wall Street bank like that still at a price target that's far below where it is today.
Right. So I think the story on Tesla, if you ask anybody, is it's a hyper growth company. But you got to look at the reality and the facts. The facts are, since the fourth quarter of 2018, essentially Tesla's revenues haven't grown. They haven't grown significantly. Their deliveries of cars, but that's since the fourth quarter. And this is looking on a quarterly basis, despite the fact that they have a new facility in China, as well as a new car. And if you look at their market share in Europe, in the key market of Europe, of Norway, the reason why we mentioned Norway is because Norway has 50% EV incentives. Their market share has dropped from roughly 36% at the beginning of last year to roughly 5% today. So the point is, there is a lot of enthusiasm, and the stock is completely detached from reality. But it's trading at a $240 billion market cap, which is more than double the market cap of VW. VW sold 10 million cars last year. Tesla sold 367,000. So you need to see tremendous growth in their revenues, and you're not seeing that. So we think it comes back down to earth later this year.
Gordon, we respect a lot of what you say, and the numbers don't lie. But what else doesn't lie is the fact that that stock continues to be on a tear. Why don't more investors agree with you?
Right. So I think what's happening is, just look at what the Federal Reserve has done. When they started QE Infinity in the beginning of April, they essentially infused in 9 weeks' time an entire year's worth of tax revenues. And in short, we can go into this in detail, but in short, what's happening is banks are being given money, and banks are throwing that money into the stock market, and they're betting on speculative stocks. So I think that as the Fed pulls back the liquidity lever, I think a lot of these unicorns, if you will, are going to come back down to earth.
Hey, Gordon, Rick Newman here. I cover the auto industry a little bit. It seems to me that Tesla bulls are not aware that there are some other auto companies that actually have electrification technology, self-driving technology. I mean, Toyota's been building electrified cars for almost 30 years, starting with hybrids. GM developed this technology, and they're all rolling it out with much greater scale than Tesla has. So what do you think Tesla's actual technological advantages are, if any?
Well, if you look at what Navigate Consulting said, they rate autonomous driving. They rate Tesla at the very last of everyone. If you look at a lot of the autonomous driving technologies out there, like the Waymos, the GM technologies, et cetera, of the world, these guys are, level 2, level 3, or level 3, level 4, whereas Tesla's at level 2. Look, I think the euphoria around Tesla is based on, right now, a lot of gambling mentality. And, I think what's happening right now is, if Tesla reports 4 straight quarters of profit, which we think they're going to use a lot of one-time items to potentially do in Q2, they get put into the S&P 500. So a lot of people are buying the stock on that. But I think as we get into Q3 and Q4 this year, right, they sold 88,000 cars in Q1, roughly 90,000 cars in Q2. To get to their 500,000 car number, they need to sell 160,000 cars per quarter in Q3 and Q4. We think they're going to fall far short of that, and you're going to see market share loss. So as the numbers continue to roll in this year, you have crossover EVs coming from Mercedes, BMW, VW, Volvo with the Polestar. You have a ton of competition, not just in Europe, but also in China. So as all of this starts to play out and people start to diversify their electricity, their EV car purchases, which they are, given Tesla's big market share losses in Europe, you're going to see some weakness. One other thing, they just scaled down their production capacity at their German plant from roughly 500,000 cars to 100,000 cars. The problem is, every negative story that comes out on Tesla, it just doesn't get any press. Like, where are the ventilators? Where is the money that Elon Musk said he was going to put into Flint, Michigan to fix the pipes, right? He did donate $500,000, but that $500,000 isn't addressing the problem. nobody focuses on these stories. So as reality sets in and people really focus on their execution, we think there's problems ahead.
Hey, Gordon, I just kind of want to maybe throw a little bit of water on that argument and just kind of look at the idea that perhaps Tesla's real benefit is that, we look at the Fords, the GMs, the Mercedes of the world offering EVs, but none of them really show off the fact that they're an EV outside of one-off vehicles that they may have as good as a Tesla. And maybe that's part of the reason why Tesla is so good, just because of the wow factor when you roll up in one. Don't you think that's part of the reason? And can't they continue to build on that with rolling out more and more of their types of vehicles that they're offering? The Cybertruck, I mean, whenever that becomes available, that's going to be another showstopper. Aren't they just a brand that's able to push the limits of style and design that really gets people interested?
I mean, this is the theory that a lot of people have, but it's just dead wrong, right? I mean, initially it was the Model 3 and I'm sorry, the Model S and X that were supposed to take over the luxury market. That didn't happen. Then the Model 3 was supposed to usher them into mass market profitability. That didn't happen. Now they're talking about the Cybertruck. Listen, you haven't had real competition for crossover EVs in the $30,000 to $50,000 range luxury market until this year. You just haven't had competition. And if you look at their market share in Norway, Netherlands, Spain, Netherlands and Norway being the biggest EV markets in Europe, their market share has went from 37% to 5%. So if in Norway being the key market, their market share has went from 37% to 5%. Norway subsidizes 50% of the price of the EV. So if the world is going EV, which we have a lot of caution about, but if the world is going EV, it's going to happen in Norway. And keep in mind, in the US, you haven't had a real EV car. The Mach-E, right, which is Ford's EV car, right? They're building 50,000 this year. It's sold out, and dealers are actually increasing the price by $15,000 because the demand is so high. Tesla's cutting its prices across the board in the U.S. for its cars. So I think that viewpoint is definitely held by many, but I think it's just wrong. Like yesterday, someone was on TV saying Tesla's going to grow its revenues 40% every year, getting to 150 billion by 2024. If Tesla had 150 billion in revenue by 2024, that means they controlled 100% of the entire luxury car market. So some of these numbers and these theories are just incorrect, and we think it's going to start to show through in the second half of this year.
Gordon, we can always count on you to get fired up. Thank you so much. Gordon Johnson, GLJ Research founder and CEO, talking to us about Tesla.
Hey investors, Zach Guzman here. Are you interested in learning more about the markets and getting the latest financial news? Well, then click